Hi there, my name is Randy Helm. In the last video, we walked through the basic layout of an income statement. So if you need a refresher, feel free to go to that video as often as you need. Now, when you review the year-end financials, you often don't get a sense of what really happened during the year that led to those results. So in this video, we're going to walk through the process of reviewing the monthly financials, looking at monthly income statements side by side. That helps you get a better understanding of what's going on with your business. Now, if you're ready, let's begin. Here we have 2 full years of an income statement. You can see that the 2020 numbers are not nearly as good as the 2019 numbers. By looking through the monthly reports side by side, we can get a better understanding of what happened. This will help us moving forward. The goal is to learn from the past so that we can make a better future. This is a process that I typically do each month and encourage you to do the same. The more you do it, the less time it takes, and the better you will understand your business. Keep in mind that the key takeaway is not really what happened with this fictitious company, but the process of going through the reports. First, I am going to expand the 2019 values so we can see the monthly numbers. You can see that for the first few months of the year, revenues are slowly growing from around $75,000 to $100,000. Things pick up a bit in the late spring and into the summer. Revenue starts to come back down in the fall and winter. This is common with businesses that have seasonality. A business that relies on people being out and about having fun, such as bars and restaurants, would expect this pattern. The gross margin has bounced around a bit between 50% and 65%. This might be a result of different specials the business was offering to its customers. For instance, at a bar, if you were to offer special happy hour pricing during the month, you can expect that more people would come in, but you might earn less profit per drink. The lower the gross margin, the lower the profit per dollar of revenue or sales. The idea is that the increased volume will lead to an increased bottom line. When I dig into the overhead expenses, I tend to start with the largest items first. Let's look at the salaries. It is the biggest overhead expense account that we see. For several months in 2019, it held steady at $21,600. It increased in May, then again in June. You will notice this matches up with the time we had more revenue. What happened is that we hired more staff to support this increase in volume. We went from 5 employees in the first part of the year to 6 in May, then 7 starting in June. We kept this staffing level until October, when we lowered it back down to 5 employees. Rent held steady during this time period. Nothing much to see here. We were not using debt, so we did not have any interest expense. As far as net earnings go, we made just a couple $1,000s during the winter. Then it grew as we approached the summer months. By December, it does taper off again. This is what happened in 2019. Now let's go to 2020. The revenue dipped in January, which is normal for this seasonal business. It started to pick up again in February and March, but in April it changed course. Revenues decreased in April, May, and again in June. As you recall, this was the time when the COVID pandemic was really starting to take shape. People were being quarantined, so we sold less as a result. It wasn't until October that the revenue started to turn back up. The gross profit tended to follow the revenue swings. The gross margins bounced around the normal levels that we saw in 2019. Now on to the salaries. For the first 3 months, we held our staffing levels consistent. But since the business was slowing up, we started to reduce staff. We did a reduction in April, then again in May. We held on to that level until business came back in November. You may wonder why the staffing levels were not reduced even further. You start to realize that if you are going to stay open for business, there is usually some minimum number of employees you must keep on the payroll. The challenge here is to try to bide your time until the market changes. As you can see, the rent still has not changed. As we mentioned in the previous video, rent tends to remain at a fixed level. Supplies tended to vary up and down based on the volume of business. No surprises here. Depreciation changed a little bit. When it rises, that means we purchased additional fixed assets and have started to show the depreciation for those assets. As it decreased, that means some older assets have fully depreciated. On the next line, we have something new. We started showing interest expense beginning in June. The owner realized that they might have some cash concerns, so they borrowed money from the bank. That started the recognition of interest expense. For the tax expense line, I mentioned in our previous video that this is usually not the actual taxes paid, but an approximation of taxes based on the average tax rate. As net earnings before tax increased and decreased, so did the tax expense. For this company, these are the main factors that went into the reduced net earnings for the year. You can see that this company had negative earnings from June through October, and that for the full year, it landed at negative $14,373. The reason we went through the different months is to show what kind of information you can glean from your income statements. The monthly reports help to identify trends very well. You can better see the relationships between the activity during the year and the bottom line. I do recommend that you review your income statements monthly. This has been Managing Your Business by the Numbers. My name is Randy Helm. Thank you for watching this video. Be sure to look for new videos from me soon. If you liked what you saw, be sure to subscribe to this channel and hit the notification bell so that you do not miss out on any new material. Also, please leave a comment down below if there is a topic you would like me to cover. Until next time, have a good day.